Hello traders, welcome back to my channel and to a new educational video. Today I'm going to be talking quickly about what are the key differences between volume profile and market profile. Market profile is also known as TPO, which stands for time and price opportunity. And a lot of people, especially newer traders, confuse the two concepts and think they're the same thing, but I'm going to highlight how even though there's many similarities between them, and you're going to see traders that specialize purely on market profile, others specialize purely on volume profile, or they can use them together as both confluence in them. Okay, but the main difference to understand right off the bat is that volume profile is an analysis of volume versus price, whereas market profile is an analysis of time versus price. And we're going to be discussing how this is. Okay, so let's just go into some theory now, and then we're going to go into my Sierra charts, and then we can just have more visual examples of this. So volume profile, like I mentioned, we're analyzing volume versus price. So what we're doing is we have a chart, and then we're going to put a volume profile, and it's going to give us contours that are called high volume nodes or low volume nodes where we have cuts. But what this is measuring is the amount of buying and selling activity on a horizontal scale at different price levels. Okay, so we're going to be measuring volume activity versus price. On a market profile, what we're going to be doing is price is going to be divided into 30-minute segments on each session or trading day. And what we're going to be forming is a profile where as price spends more time in certain areas, then the profile is going to start getting more and more extended. Okay, so on market profile, we're going to have either letters or blocks. I prefer to use blocks myself, but I'm going to show you later on in the video about this. But the areas with the most blocks in this case, this is where price has spent the most amount of time. So we're comparing how much time price has spent as different price levels. Volume profile displays total volume traded, or the delta. We can also measure buying and selling activity, or delta, which is aggressive buyers minus aggressive executed traders. So executed buys minus executed sells, that's going to give us what's known as the volume delta at every price level for a specific period of time. Wherever you hinge your profile, it can be for a session, a day, a week, or you can just put a profile on whatever segment of price you want. We have a value area, which I always use 68% of the volume. Most platforms by default are going to put 70%, but I like to use 68% because this is based on a bell distribution curve where you can see we have, and this is applied, to almost anything in science and nature, where we have a standard bell distribution where we have a mean right in the center, and then we have one standard deviation to the left, one standard deviation to the right. Each one is 34%. So if we add those up, that's 68%. So that's why I always like to use 68 instead of 70, just because it is more exact. Okay, so we have the value area, which is going to be 68% of where the traded volume was. We're going to have a point of control. This is the price level with the most traded volumes. And then we're going to have a value area high and low, which is the extremes of the value area limits. Then we are also going to have, like I said, high volume nodes. These are areas where large volumes have been accumulated. So this implies that price was consolidating in these areas, building up more traded volumes there. Then we have low volume nodes. These are areas where volumes are low. Therefore, we have less interest in these levels. Price tend to reject or pass through these levels very quickly. Okay, so like if we have a profile here and we have something like this is what we would call a B-shaped profile. Then you can see we accumulated probably market, let's say, opened here, it traded here, then we had an impulsive move, and then finish off trading here. So we build up 2 high volume nodes right here on these consolidations, and then these areas where volume was very low right here, this is our low volume nodes, because price went through this area so quickly that there was not a lot of accumulated volumes. And these areas are going to be the edges of the high volume nodes, which are always going to be obviously at right above or below low volume node areas. These are going to be big areas of support and resistance, okay? And the volume profile, commonly there's 4 shapes that we can analyze. I'm not going to go into details regarding the shapes because there's specific strategies or meanings for each one of the shapes, but you can have a volume profile that looks like a P, something like this. This is usually a short covering day. Then we have profiles that can look like a small V. This is long covering days. Then we have, like we said, our double distribution, our B profiles, which means that the market opened and closed and accumulated values at both of these areas, and we have a lack of volumes in the middle. And then we have a D-shaped volume profile, which is usually a balanced profile where you have a very clear interest right around the middle, most volumes accumulated there, and then towards the sides we have less volumes near the edges. Okay, so that's volume profile. Market profile, like we said, time versus price. It was developed by floor traders in the 80s as a way to organize market information, because at the time there was no way to really track live the traded volumes in the markets when they were open. So they developed market profile as a way to organize price in terms of how much time is spent in levels. And as we're going to see, there's a very close relationship between price and time. Usually, if you apply volume profiles to a market profile, they're going to look very similar usually, and their points of control are going to be very close together most of the time. So, it only makes sense, is logical, that if market is spending more time at a price level, we're assuming there's also some more volumes accumulating. But, that also has to do with news events, with what time of the day it is, etc. Because as you know, for example, the market opened like the first 2 hours and like the last hour of each stock market trading day are the highest volumes, etc. So TPO, like we said, uses a 30-minute time frame to split all the blocks. It measures the auction process between buyers and sellers and areas of balance or imbalance, acceptance or rejection, etc. Okay, so for me, market profile, the main utility that I see for it is as a way to organize data, and you can zoom out and just see what areas price is finding acceptance, what areas we could be looking for an imbalance, meaning that price is going to break out or break down from a certain balance area and look for acceptance at lower or higher values, etc. And we're going to look at this more when we look at the charts. Just like in volume profile, the market profile also has a value area where we track 68% of the time that price spent there. There's a point of control, which is the price with the most traded time. We have some unique features we track on market profile. One of this is called singles. This represents breakout points. This, if you're looking at a chart, is what we would call a gap. When you have a chart that's like this, and then we have a sudden push up with very little volumes, a very illiquid move, usually you're going to have a single right here at the release point where price just took off from there. So these are going to become very important points to track, not only for targets, but as possible entry areas on pullbacks. Then we also have another element that we call poor highs or lows, which is where auctions were not efficient. We're going to talk about that in the charts, but this basically means usually when you have a market profile, you want to see what we call X's on the extremes, meaning you want to see just a single file of 30-minute blocks at the top and the bottom edge. Because if we have, let's say, two periods right at the same low, this usually indicates that we've had a double bottom, or we've had price touching at the exact level over several different periods of time, and usually these are not very stable, and market will usually try to come back and correct these areas. So that's why we want to track them. And there's different day types to form strategies related to market profile. There's non-trend days, normals, trend days, double distributions, neutrals, a P or a B, which is pretty much the same as the volume profile. Neutral days are like a D profile, the same thing, just a very balanced market profile, etc. Okay, so let's go into the charts now. So this is Sierra chart. You can use any trading platform. You cannot use TradingView because TradingView doesn't have true tick data. So I don't really use many order flow tools on TradingView. There is some custom studies for this, but honestly, I don't think they're really, very reliable from what I've seen, but I have limited experience with them. So I would recommend just using another platform. This tools, market profile, volume profile, they work on all markets, futures, crypto, forex. I would recommend looking at currency futures from the CME just because you're going to get a lot more reliable volume data, but especially in futures markets, these are amazing tools that I always use. So let's talk about what the market profile is here. So on the left side, I have a 30-minute chart, and on the right side, I have a market profile. So these two profiles right here is this period right here. So this is what we call extended trading hours. This is going from 6 p.m. all the way to 9:30 a.m. the next day, and that's what this blue profile is. And then right here from 9:30 a.m. up until 4 p.m., which is the cash close, and then 5 p.m. the official settlement. This is what we call RTH, regular trading hours. This is where we're going to have the most volumes as the US market, and also the European markets up until 11 a.m. Eastern are going to be open. That's going to be this market profile right here. Some people would only look at RTH, or you can also put them together if you want to see this as a complete 23-hour period in futures, for example, or a 24-hour period in crypto, etc. Okay, but so what we can see here, if you look at this right here, it looks very different from this. But there's several things that we're going to track then on the market profile. Let me just expand this. And let me right click on this. There's an option here called letters and blocks in own column and standard profile. If I do this, you can see this has now been split up. So this is useful. Remember, we're looking at this period, and that's going to be the same as this period. So when we split this, what this is going to be showing us is each one of these columns is going to be a 30-minute period that corresponds with each one of these time-based candles, okay? So like, for example, here, this small little candle right here is going to be the open that we have here. And so you have marked this purple dot right here. This is going to be the open, and then this red triangle that I have here is going to be the close of the market. So you can see we open right here and we closed right over here. Okay, so as you can see, as the day developed, market opened here, we went down, we found support, and then we ended up pushing all the way up and closing in green for the session, a little bit higher than what we opened. So this is the same thing represented in time. So what the market profile does is it starts putting in the profile, and you can see here the colors get darker as the day goes on. So this whole area that's light gray was this initial area that we had here at the open, and then as the session progresses, this gets darker and darker until we finish here, right here, in the darker tones where the market closed. Okay, so we're gonna start putting in lines. If some people will use letters on the market profile, they'll start usually with A. So the first period is called the A period. Half an hour later, we have a B period. Then after 1 hour is the C period, etc. And so as price pushes up and then comes back down into this prices, this starts extending. If it comes back above the next prices, it starts extending again, etc. until it forms this. And then here, if I expand this more, you can see that you can add a volume profile to each market profile here. So for example, this volume profile here corresponds to this market profile. Let me just get rid of this split and bring it back up just into the single shape right here. So again, we're focusing on this period. And as you can see, there's some elements that are the same on this. However, you can see, for example, based on the volume profile, our point of control was right here, which was at 42.73. But if you look at the market profile, the point of control was at 42.52.50. So that means the highest traded volumes were right here, but the longest time we spent at a certain price was down here, which you can see was right around this area. But the biggest traded volumes that we had were right around here, okay? And this makes sense on extended trading hours because this is the Asia session. Then at 3 in the morning, right around here, Europe opens. And then usually we have big volumes coming in right before the regular market hour opens, okay? Now, as far as the singles and the poor highs and lows, let me just expand this. So right here, you can see this pink lines here is what I have marked off as singles. So you can see here, we had a big gap right here going all the way from 42.98.50 all the way to 42.81.75. And if I go look, this occurred on Tuesday the 3rd on the regular trading hours. So let's go into here. And that move corresponded with this candle right here. So that poor high, that singles that we had was right here. When market broke below this, it left this gap, and that's what we see on the market profile. That is what's represented right here by this singles right here. And you can see that today, this occurred on Tuesday, and today on Wednesday, market opened and we popped up and filled in this whole poor structure that we have here, okay? And now the poor highs and lows, I have them marked with purple dots right here. And you can see 2 examples right here. And what this means is that we spend 2 30-minute periods. We came right at this exact price. And then we did not have a good auction. Like this is not a very good auction as well at the bottom, but like this is a good one. You can see right here we have this what we call excess, where we have a tail of just a 30-minute period that extended, meaning this was a well-auctioned extreme between buyers and sellers. Okay, and this poor high and low, if we go see, let's see this poor high that we had on Tuesday night. If we go into our regular 30-minute chart, that poor high was right here. You can see that we had 2 30-minute candles with the wicks at exactly the same price right here. So that's why we had 2 extremes and what we call the poor high. And then you can see right here how the market opened. This dash lines, this is 9:30 a.m. when regular market opens. And this little thin lines is 6 p.m. when the market, the extended hours opens. But you can see we had a poor high right here from extended hours, and market opened and immediately came and tested and fixed that poor high right there. Okay, and so yeah, market profile, like as you can see, it's very similar a lot of times in structure to volume profile. So for example, like here, this two profile, this is an extended trading hours again, but you can see how market open right here. You can see the point of control for the market and volume profile are almost the same. Here we had a singles on this breakdown, and then you can see this was what we call poor structure because it was not filled in. And then right here, you can see we accumulated some time here and some volumes. We accumulated a little time here towards the close and more volumes. And here we had accumulated time and volumes. Okay, days like this one, for example, this was a balanced profile on both the TPO and volume profile, where you can see our point of control, or in this case time-wise, what right at the center, and we had a nice D shape. In extended hours, like I said, usually the point of controls are going to be different just because those last hours between like 7:30 and 9:30 a.m. volumes start building up, so it usually skews the volumes for the extended hours. But during regular trading hours, they'll be usually closer. And you can see that, for example, right here, this is a regular hour, regular hour, regular hour. The points of control a little bit more in line. And then you can see, you know, the different shapes. This was a P-shape profile right here, meaning this was a short covering day. And if we zoom out, just to finish off, what I was talking about was, here, let me actually go into the settings. And I'm going to set this market profile so that it doesn't split extended night sessions and day sessions. Okay, so right here, there's an option, new period at day session starts when using evening session. If I have it set to yes, because I want it to split extended hours and regular hours. But if we just put no here and apply, now you can see it's joined both profiles. These blue areas are the outside value areas for nights, but just ignoring just the colors, basically now each one of these market profiles is a whole 23-hour period in the ES futures. And what we talked about balance, you know, if I zoom out a lot, what I like to see with market profile is just to see price balance. For example, here we can see that price span since September 5th up until September 18, we were right in a pretty large balance area between 44.80 and 45.50 or so right here. And then right on the 18th and then on the 20th, we had a breakdown, and now price started finding a new area of balance right here. And you can actually see that on Monday right here of this week, we've actually broken down, and now we are finding acceptance at lower areas. So while we make plans with market profile, okay, I see this general area. So now if price breaks out into here, then we can assume it's probably going to start extending into these areas if it's accepted. If it comes and rejects fast, it means that sellers are still in control, and we are now starting to look for more discounted prices right down here. Okay, so that's the main use that I like to see, is just overall structure. And just like with volume profile, again, I look for poor highs, poor lows, singles, etc. So for example, here we can see this is a very important level right here. We had lows on 2 days right here from last week, and then we opened up this week here on Monday. Tuesday we broke down and closed lower here. Wednesday we've retested and we've closed right below it. So now we're gonna see if we push up and start building time and value here, then we might expect market to start coming into now this point of control areas here. Okay, so that's a introduction into the key differences between volume profile and market profile. I hope you've all enjoyed it. Thank you for tuning in. Make sure to subscribe. For more details on all my trading strategies, go check out my website and course page. Follow me on Twitter, and I will see you all in the next video. Take care.